Senor Ortiz.
Hey,
You ready to kick this thing off, brother?
Hey,
Let's go. Hey. Woo! Look, y'all, it has been a crazy weekend in the market. So we finna take a ride tonight. What to do, KTTV? This is KT, and I am here with my co-host,
JoJo, baby.
Hey, and we are the administrators on the Administrator Podcast. Look, y'all know it's been crazy in these streets. Wait till we talk about this news story tonight. I'm just getting straight to the money because I am so excited because say, man, you just never know what happens over the weekend, man. I'm thinking about everybody right now who said, I'm buying puts to hold over the weekend. God bless y'all, just in case, because it could get crazy out here, man. How you been doing, brother?
Man, I'm good, man. I think, I feel like I'm in a different place right now with the market, the way, kind of like we did last week, navigating the ups and downs. I know you've been, navigating it before me, but I got to kind of make some money on some puts last week, trying to put some money long term still. But man, we went out this week to see this Space Cowboys game. But people who out there don't know, Space Cowboys are the Houston Astros 3A farm club, and so we're all the youngers get a chance to prove themselves to make it to the Astros. Their last stop is Sugarland, and so they won the championship last year. And so last night we got championship replica rings. And
okay, let's go.
So yeah, so that was exciting last night. So man, we're here getting ready for another week of work and another week of this market.
Another week of the market, man. So man, look, as we go through that though, how is the channel going, man? What's going on?
Man, look, TikTok is pretty good. I'm getting there with in case y'all didn't know, JoJo's Collectibles, hit me up, all platforms. Instagram, TikTok, and YouTube, baby. But yeah, man, it's we're grinding through. A lot of shorts out there. Got some longer ones that I want to do this coming weekend. Just to talk about different types of trading card investments now that baseball season's in full gear. Yeah, man, y'all be on the lookout for that because there's some rookies out there that are taking off.
Man, yeah, and the biggest thing is, man, as we talk about stocks, we talk about getting the bag. We have to let people know it's not only one way to get to the money, right? So you got your job, you got your stocks, but if you are into those things, cards, trading cards, Pokemons, all of those are very, very profitable in the game. And so we got the guy right here. So if you have not been to check out that channel, make sure you get over there, man. All right, I guess without further ado, man, let's jump into some news, man. All right, man. First off, let me go and take off our background because I want people to see. Woo! Here we go, y'all. According to CNN, big shouts out to CNN for coming through this. It's not a party representation, but I love CNN. Smartphones and computers are now exempt from Trump's latest tariffs. So this story came out yesterday, Saturday, April 12th. Electronics imported into the United States will be exempt from the reciprocal tariffs, according to the U.S. Customs and Border Protection notice posted late Friday. Smartphones, computers, monitors, various electronic parts, maybe the chips, are among the exempted products. The exemption applies to products entering the United States or removed from warehouses as early as April 5th, according to the notice. The exemption, which comes after the Trump administration on Wednesday imposed a minimum tariff rate of 145% on Chinese goods imported to the United States, does not include the 20% tariff on Chinese goods for the country's role in the fentanyl trade. My God, that's 160. Oh my God. The tariff exemption would have a major impact on tech giants like Apple, which makes iPhones and other products in China. And so roughly 90% of Apple's iPhone production and assembly is based in China. So that means, man, I wish I had that song. Free. Because Apple, but now understanding that the stage for this has not just started, right? It's no random, but Apple has already proposed, according to the president, $500 billion for companies and plants to be made inside of the United States. I've seen so many memes saying, man, we don't want to make iPhones in the United States. They're gonna be too expensive, right? But the biggest thing is they have already guaranteed that they are going to pledge their money to the United States. So of course they would get a little relief. And so this goes for companies like Nvidia. This also goes for companies like AMD, because remember he just said all other parts as well. And so we need all those chips and all of those pieces. So hey, man, what you got to say about this?
Wow. As an Apple owner or option buyer, and someone who's talked about Apple a lot on this podcast, and I was going to talk about Apple again tonight. This makes perfect sense. But it all goes back to what we've been saying and what we said before, man. It's like you find a way. Someone always finds a way to put their hand in the market and figure it out some way or another, to the up and to the downside. And a week ago we were crying, 2 weeks ago we were crying, kind of figured it out. We're gonna see tomorrow though how it responds. We're gonna see.
Yeah, that'll be the thing.
I mean, everything's gotten so beat up. QQQ, Apple. I don't know if this applies a lot to Tesla, but we're gonna see tomorrow.
Yeah. All right, man. Well, I guess we'll. Yeah, you're right, man. It's just crazy how so much is driven off of tweet or like a story or article. I mean, like, millionaires were made a few days ago. And the thing is, it was all off a tweet, because when that thing ran, man, the other day when we went straight up, dude, it was, oh my God, man, it's just crazy out here. All right, well, look, y'all, what we'll do, we'll take a quick break, and when we get back, we gonna get into some each.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
heat check. Let's go. Woo! Are you ready for this, man?
Let's do it.
I hope y'all ready for this one. Bam! Oh, hold up, Screw. Look, y'all. I don't know if y'all seen last week's episode, but I guarantee you it did not look like this map right here. Last week was pretty red. Stoplight red, fire engine red. But today, I told y'all millionaires are made, and we are now looking at what's going on out here in these streets. Jose, I'm gonna let you kind of break this down, man. You start, let me know what you think.
So if you participated in any trades or even were active the past week, you saw the trend was pretty red, and then you see that a lot of our tech names were not only green but bright green. I think the biggest area for me that I noticed or that I saw, well, maybe not particularly the area, but like the financial section with your JP Morgan Chase. I think Chase was up tremendous. Toward the end of the week, your Nvidia was up, your other semiconductors. But what I was going to talk about later in the show is my bad boy Apple getting beat down. So a lot of these tech stocks, which is the majority of what you're looking at here to the left, your tech giants, Nvidia, Apple, Microsoft, then your financials. We had some green Man, we had some green on Thursday, Friday. And so again, anything tech related, then you had your Google and of course Amazon. But when you compare this to where we were last
Mhm.
week, when everything was just getting hammered and destroyed and getting taken out, rug pulls here and there. Think about what happened with this tariff news. Think about what happened with Trump talking about how there was a pause, and we kind of knew certain things would happen with the pause. But the day after the pause, people did sell off. They took their profits. Um, that's what happens. And so on Friday,
Mhm.
we had a steady growth again. Wasn't too outrageous. Wasn't too, as you can see, it wasn't really everything wasn't bright green. But we had enough bright green to where it carried the market. But that's just what happened on Friday because we did have big gains, we did have a sell off, and then we had a steady on Friday. So that's what I see when I'm looking at the heat check.
Hey, look, man, it is crazy out here. But now let's look at something. And so what amazes me is Meta, right? So we see
Mm,
Meta having a, if we go down to our legend here, it says 1%, right? Negative 1%. And so for me, after they ran up to 700 and a lot of them not even have anything to do with tariffs, I do wonder what is under the hood that is causing Meta, Netflix, all of these people to, really be kind of lagging behind, right? And so you think about advertising, you think about media, and looking at this section right here inside of there. Well, Google doing the thing. Let's go. But that just lets you know that even when you look at QQQ, that it's revving up, right? And so we still got room to go because Meta has not even came to the party.
mm.
Netflix not at the party, right? So we know we got at least 70 more bucks to go from Netflix, just for starters. So we'll see what's happening. Lily showed up to the party, and I did take profits on my United Health call, but I think I may be jumping back in. I wanted to see what was going to happen with everything. Might be jumping back in because we coming back up, y'all. Coming back up. So let's see where we at. Yeah, 599.47. And so thinking might jump back in once we cross over that 600. We've been fighting at 600 for a while, and so that's why I did get out because don't know what's gonna happen. I think I watched it the other day and I jumped in. It got up to like 603, but then of course they look where we closed back at again. So 600 been slapping it down. Once we do make that full close and retest, I will jump back in and see if I can't take this thing back up to about 700. But I did take those
Mm,
profits.
mm, mm,
Been holding for a long time, y'all.
mm.
I watched that call get all the way down to $300, knowing I paid 2,000 for it. Got to be strong. All right, y'all. What we'll do, let's jump over to the next section in the heat check, and that is looking at our fear and greed index. We see all that green, but then we still see what's going on in the city. So now we can see last week, or well, the previous close, not even last week. The previous close was an 8, right? And so we moved from an 8 to a 13, which means we are on the rise. 1 week ago, we closed at a 3. And so if you can kind of see what's happening with the market, remember what I told you. This is when you start your positions right here, right? You don't go all in, but you got to start at that base because everything right now is on sale. When we start getting here, you kind of see the momentum picking up. You add a little bit more. You can keep on adding right here, really, but be ready for anything that happens. But once you get over here, you gotta be kind of looking. You gotta looking. Pay attention because by the time we get to here and here, people are selling. By the time we get over here, you got to take profits because eventually something is about to go crazy, and we probably gonna end up back. Don't know when, but you always got to be looking by here because everybody is building their positions over here, and we can tell that by looking at our heat map, right? And we said we know that people are now buying positions. We can also tell that by looking at what happened 1 week ago. 3, what happened Thursday. 8, what happened Friday. 13, right? And so just paying attention, y'all. Paying attention. It's laid out there for you. This is why we go through these things in the heat check. Remember what I said, this is not all we use, but they are very, very important into knowing the market sentiment. Okay, Jose, let's jump straight into that VIX, man. So VIX is at 37. This is a chart. Uh-oh. Okay, did it go off?
No, but I think you were cutting in and out. Was that you or me?
Okay, yeah. I was just saying, let's go straight into this VIX, man. So kind of talk to me about what you're seeing, man.
Well, the fluctuation, if you think about where we were at with the volatility index between the last week and where we're at now, I think we were at close to 45 at one point. We were comparing it to when COVID was in the 50s. But I think that we're starting to steady. If you can see the chart, it's almost like it's in a consolidation area where you would consider that for any other stock consolidation area. So if we stay what you don't want to see is the extreme spike up and the extreme spike down, because while we want to be able to profit in the market when it goes up or down, the ultimate idea is to sustain something long term. So, if we steady out for a little bit in the VIX and then we just continue to go down, or the VIX continues to go down, that'll be something good for the market because it can sustain the move for a longer period of time, as opposed to if you look and see the highs of VIX and the lows of VIX, you don't want to catapult to the sky, because then that's bad news. But you also don't want to catapult down if you're the VIX, because then that means we're rushing the market growth too fast. And so I think you really have to pay attention to where we're at now. Let it fluctuate for a little bit until we can really, really, really get into a phase in which we can have the VIX continue to go down. So
yeah. And one big thing that we're able to see on the VIX, like you said, we don't want to see a big drop because that's something that we can't sustain. But what looks good now is, and I can't do a trend line, but you can kind of see how we're going down. So we got lower highs and lower lows, right? Lower highs, lower lows. And so that is really something safe to say as we inch our way down. So, right, we get this little pullback, but it goes here, then we come back down here. Maybe we get some here, come back down here. Very much what we want to see as we ease back down, fear and greed ease back up. All right, so that is it for the heat check, but I did want to add 2 things in for the heat check as we kind of get that overall market sentiment, and that was the first one would be earnings for the upcoming week, right? So we're looking at who has some of the anticipated earnings for the week of April 14th. All right, can you see that?
Yeah.
Okay, so let's see who we got coming up here this week that I'm really looking at. So we got Applied Digital. I have been buying in at Applied Digital at around $7, $8. I've just been kind of working my way down. Really want to see what's going to go on with that for the week, but that's really all I got my eye on. Of course, we'll see what's happening with United, but that's personal. ASML. So for this, I think, wait a minute, Jose, I want to kind of go back to the heat map and kind of see where is ASML, man. Do you, because I know that's a semiconductor. I'm trying to see. I just want to see what is the price for this stock, because okay, it is whoa. All right, ASML. I want everybody to see this stock right here. Are we looking at this stock? You see that screen?
Yep.
Okay, so let's look at the 6 month for AMSL. 872.27, right?
Wow.
And so I've been kind of rocking with this. Anytime it is under 700, I thought about getting a call. I may just blow the bag and get one, and then just see. Because look, the past 6 months we are down $203, but ain't too much moving without ASML.
Yeah.
All right, and so I do believe, especially with the news tomorrow, that this will be over 700 at open, but we will see. And then the next one, that'll be coming up for earnings is Taiwan Semiconductor. So we think about Taiwan Semiconductor over the last month, 171, 177. But then we also come back over the last 6 months and we see that we were 224, 221. And so we can see we got a little room to go on both of those stocks. And so as they come up for earnings, I always want to just keep y'all abreast of some of the things that I am looking at. Yeah, so grab you some shares if you want to just keep it a little kosher for this week. What about you, Jose? Anything?
Well, I'm looking at that TSM right now. When is earnings for them?
Be before open Thursday.
So if you're looking at some calls, I'm looking at some $200 calls right now for June. If anybody's interested in Taiwan Semiconductor, $200 calls for about $121 right now. Open interest of around 12K.
Oof.
So depending on what happens between now and on that day, because I thought that they had some news too where they were putting some money into American factories as well.
Yep, they are. They are. That's why we said the good news for the chips.
Yep. And so now, depending on how much it fluctuates tomorrow. Now, because it has been down, if you look at TSM and what KT was talking about, I mean, that month looks, the monthly chart and the 3-month chart is definitely beat up. And so you can anticipate some type of run. But if I'm looking at 3 months out, for June or 2 months out, we're sitting at an RSI of 42 right now. So might not be a bad time to, try to get some before earnings. Now, that is not advice to play the earnings, y'all.
Don't play. Ooh.
But sometimes we do take risks.
Sometimes. And when you think about a TSMC that can run $48, woo, man, I don't know. I'm gonna double check on that. I'm gonna get with you on that 120.
The beautiful thing about that and the earnings, KT, is that with the earnings being Thursday, you got a couple of days to fluctuate, get in, get out. If you did it before the earnings, but the good thing about a June call, July call, at a reasonable price that you're paying in, you just remember it doesn't have to hit that price. Any profit is profit, but you have time though. You always want to have time after earnings to let it kind of sustain its way back. So that's why I don't do any weeklies or dailies on earnings, but I will hold through earnings if I know that I have at least 2 months, 2.5 months, 3 months to hold it. So that might be the plan for TSM.
Okay. All right, man. All right. And lastly, I wanted to go to what we have this week for our economic calendar. And so as we look in, nothing too much Monday, we got feds that are speaking. Tuesday, we have our import price index. And so as you know, with trade wars, import, export, everything is crazy here. So that is something to look at. Wednesday, we have our retail sales report. So this could have something. Home builders, kind of looking at some of those. Right now, we know it's crazy for homes. They're working on interest rates. Thursday, initial jobless claims, housing starts, building permits. So Thursday has the potential to do something. And Friday should be quiet. front of the market. So I guess for us, the biggest days we're looking at is Thursday. Wednesday and Thursday, right? Because we want to see retail sentiment. If sales are down, they can tell us it's rough out here in these streets. People may go right back into fear, right? So we'll look and see. But I'm hoping that people still spending money. But I think it may be slowing down, man. So that is it for the heat check. What we'll do is take a quick break. When we get back, we going trading with Ortiz. Trading with Ortiz. Let's go.
Love the chase and the hunt, and I set the pace when I...
All right, y'all. Welcome back to episode of the Administrators Podcast. Trading with Ortiz. Mr. Ortiz, Senor Ortiz. I know that you gave us a preview of what you could be talking about today, but just in case nobody heard it, please tell us what we're looking at today, man.
So today, y'all, and especially right in time with the news KT talked about, we are going to be looking at our favorite, or my favorite stock, when we think about what we, look at, and that is Apple. Can everybody see this chart?
Yes, sir.
All right. So I am looking at Apple right now. Let me make sure I got it on the 1 month. And so this is the 1 month chart for Apple. And, I added, the moving average onto the chart for this week's segment. So the first thing I want to look at is, of course, we did have that big drop, 220s down, we reached about 170. And even before the news that happened Saturday, if you look at the tail end of Apple, y'all, we are starting to see a bull flag. We consolidated a little bit. We had to shoot up here, and we have now crossed up above that moving average. Our RSI sitting at around 47 right now. And so one of the things that I looked at for Apple was the steady down that it had been coming, trying, to make its way out of that here. And then we just had this tremendous drop with all that tariff stuff. But notice also that even back in our March area, when all of this started a little bit, Apple continuously took a hit from up around 248, almost the 250 area, and we dipped back down to around 210 here, y'all. So it wasn't looking good, but we stayed with it. We kept talking about Apple. We kept talking about this news. We kept talking about the tariffs. We kept talking about they're going to find a way. And so they consolidated here a little bit. We got up there, but then the bottom fell out again because of that news. And so now, we anticipated that very, very much, that if you look at the gap that it filled to 197, it broke all the gaps until now. We had come all the way back down and filled the gap in this area, y'all, 170. So Apple's looking like it could be ready to roll, y'all. Like I said, we got this bull flag forming, and we had the news that came out this weekend. And I just want everyone to look at the SPY with me, because SPY is in the same type of scenario. When you look at it, SPY's RSI is around 49. And if you don't know what SPY is, it's the S&P 500 spider that deals with the actual movement of the stock market. So 486 was where we hit. I want to say that it was, if I could be wrong, but I want to say that it was as close to a bottom as we could get to. So if you think about where SPY was not so long ago, we're sitting at 610 February, had that double top, January, February, we dipped back down, but then again, the bottom fell out once we got to 275. We rode it all the way down to 488. We have been talking about one of the things that we have been talking about on the show is start nibbling. It can come back. If you look at SPY at the 480 area from where it was, the 615-ish area, definitely that was a more than a 20% drop. And so 620 to 560 was our 10%. And then you go from there, you go down another 60. So you're breaking 500. You're going down to 485. Definitely something that we are looking for it to bounce. All these moving averages, SPY broke underneath it, SPY bounced. SPY broke underneath it, SPY bounced. Broke underneath, bounced. Broke underneath, bounced. Broke underneath, bounced. So guess what? We broke underneath, stayed underneath. Is it time? It could be time. Could be
time.
Could be time. So if we gap up, if we think about gaps, let's gap back up to 547. We are sitting at 535-ish, 534 right now. If we gapped up our first gap, it's going to be the 540, 42 area. Keep gapping up to 547. Hopefully we can make it back to the 560 area and then eventually touch back to the 574. Now, remember, we don't want to do this all in one day, but, we want to get back up to that area, but we got gaps to fill first with a little bit of resistance in the 540s, 545-ish, and then getting back around 563. So let's see what SPY can do. I think there was a little bit of consolidation right in here. I think we do continue to move sideways a little bit. Probably with this news tomorrow, we're going to spike up. But I anticipate it pulling back down depending on how far we spike up. Don't be surprised if SPY itself makes about a $10, $15 move tomorrow.
Woo, I hope so.
Man, and we gap up to 564, 565. But if we break that tomorrow and go to 575, which I doubt it, because that, but hey, SPY did run $34 in one day last week or the week
That's
before.
what I'm saying, man.
So, man, well, y'all watch out. So keep an eye out on Apple, keep an eye out on SPY, and let's go back to what KT was talking about with this tech and our QQQ. QQQ, same thing as SPY, big dip, big dip, 538, rolled down to 467, touched even more so at 460, rode all the way down to 407, and now below the moving average. Let's see if we can get that spike. So QQQ is definitely going to be something to look at with the news when it comes to smartphones, computers, computer parts, because QQQ is all about that tech. So
all about that tech.
And so that's what I got. Now I know one thing that everybody's probably saying, "Oh, we talk about Apple all the time," but hey, if there's going to be one consistency, you got to be your ETFs or when you're talking about ETFs that play the entire market, like your SPY, VTI, your VOOs. I mean, why not? Because the whole market, I mean, that's what it is. It's the entire market. And then we got our picks like Apple and QQQ to go in there as well. So,
man, you wouldn't believe where I'm going today, dog.
Uh-oh. Another
talking uranium today, dog. We're talking uranium today, man.
Oh, okay.
Hey, man, let's go, man. Look, y'all, we're going to take a quick break. And when we get back, first off, big shouts, Mr. OT. Thank you for that presentation on that Apple, man. Like I say, just looking at that tech, you've seen the news. Remember what I said, react to the things that's around you, right? So that Apple is right in line with what just happened in our news, right? So it could react to that. But the thing is, you just going to get the information, be abreast of what's going on. Hopefully, by the time you see this, you will still have an opportunity to get in tomorrow, because things will happen at the beginning of the day. That'll kind of tell you where we could be looking. but all the move is not going to happen one day. But pay attention to what's going on. Let's take a quick break. When we get back, Platform Probing. Let's go. All right, y'all. In this episode of Platform Probing, we're just gonna take a deeper look into the charts. This is, I'm going to say, I'm going to do a double on these. Not financial advice. I am going to start buying some shares right now because I think you just hold these, and if they down at this point. But I think you also can make a good trade off of this. So let's take a look into the charts. Sorry about that, y'all. I was doing a little drawing here. But the first thing I want to talk about is Cameo Corporation. And so the ticker is CCJ. And so what this company is, it's a nuclear energy stock, right? And so this is what kind of caught my eye was according to Zacks, which is people in the stock market world, okay, right? They put out articles, they rate, they give you all kind of things. They saying 2 nuclear energy stocks that are down at least 25%. And so remember what I say, down, on sale, right? Well, don't sell. You're selling now, but it's on sale because we have to move to different forms of energy as we look to power all this AI doohickey that's coming. Stocks skyrocketed on Wednesday after Trump authorized a 90-day pause and a substantially lower reciprocal tariff during the period of 10%. The market gave up some of those gains Thursday, and we did know that. But investors are likely holding off on making their next big moves until the start of Q1 earnings season, which kicks off with JP Morgan. And they did have a good earnings, by the way, $14 billion in profit. Let's go. All right, so let's talk about what is the company. Well, that first off, he got BWX Technologies, but we're not covering that one today. Why this stock is a must-own uranium miner for nuclear energy growth. So Cameco, I'm going to say Cameco, just like Cameo. Cameco is a Canadian uranium miner and a leading supplier of uranium refining, conversion, and fuel manufacturing services. Cameco is the second largest uranium producer in the world, according to the World Nuclear Association, and one of the few large-scale uranium miners most retail investors can buy. Cameco boasts 2 of the highest grade uranium mines on the planet in Canada. CTJ's importance to the U.S. and Western countries has grown as the U.S. seeks to reduce its reliance on Russia and the region, which dominates the uranium market. So look at what we're saying. We got Russia, which is number 1. Right now, everything is cool, but we don't know how long that'll last.
Yeah.
But number 2 is Cameco. Pay attention. The U.S. uranium mining industry went nearly dormant until the U.S. government's recent nuclear energy push. But restarting the U.S. uranium mining industry won't happen overnight, bolstering Cameco's bull case. The company has averaged 25% revenue growth over the past 3 years and is projected to boost its suggested earnings by 96% in 2025 and 66% in 2026.
Wow.
CCJ expects to double its dividend 2023 and 2026. Wall Street loved the stock with 12 of the 15 brokerage recommendations we track rated strong buy and 3 rated buy. The shares have surged 310% in the past 5 years, despite a 37% drop from their December highs. Cameco is fighting to hold its ground near its recent lows and its highs from 2006 to 2011. All right, so I just wanted to kind of give y'all a little background on what's going on with this company. So I'll just say CCJ, which is the ticker. And so as we can see right here, and I pulled up the monthly chart, we are currently getting a retest of the 60-day EMA. And so you can see we've kind of been in this channel ever since, when did we kind of start moving up? Oh, November of 2020, right? So we've been kind of starting down here at $9. So just think we buying all the way to $9. Here, 2025, 5 years from now, we are at $60, right? So you think about all of those people during the pandemic. I guess this is pandemic life down here or something. The world shut it down. But as you can see, we've been rolling back up. But we are coming back down to a retest right here, which is $35. But that just lets you know, because I'm trying to look and see when we came back and retested this again. So we retested this. Yeesh, man, it's been a minute since we retested the 60, right? Wow. Okay, look, the last time this happened was way in 2010 where we retested the 60-day moving average. So let's see what we got. Something could be happening here. That is because we did get a nice rejection at the support of this angle, which closed us out at $40.84. But we know that we always want to retract to where we were. And so we got room to get back up to $62, right? We don't know over time. Let's go back and look at our 4-hour chart. But first, let's go under the hood a little bit more. They do have earnings in 18 days. So let's kind of look at that. This was the last time they had earnings, February 20th. Surprise was 0.2%, but it was not down here. So we will take anything that's on the wind. Right here is where they are expected to go May 1st. So we will see what's happening. Remember, they did say that they are increasing the dividend. So when we look at the ratings and the technicals, we do have a sell rating. But we do have a strong buy by analysts with a 1-year price target of $58.31. So let's go in and look a little deeper on the technicals. So moving average, just say strong sell. We got the relative strength. So our RSI is sitting at a 47. Jose, what you think about that, man?
Man, I just looked it up over here, man. I think I'm going to miss calls, man. I was looking it up. I was like, man, I said, put it on my watch list, and now I'm looking at some calls for January of this year or next year. So good finds, man. Appreciate that one right there because it's now on my watch list.
Yes, sir.
Yes, it is.
Yes, sir. All right, y'all. So basically, like I said, we're looking at the charts right here. We do see anytime that you come back and you retest a monthly moving average, especially like the 60. If it came down to 200, oh my God, that would be heaven, right? So, but we came down and we tested this 60-day moving average. It's been a long time since then. We've really been riding the 9 EMA and the 20. So this is a big deal that we came down here. Now, the piece is let's watch it. Let's see what's happening. Because if we can close back above these, we are in the money, but we can't wait a whole month. So let's get a little bit closer inside of the hood and tell us what's happening with this stock on the trading side of it. Because remember what I said, if you want to do some shares, we here at a strong buy. 5 years ago, this was $9. Right now, we at $35. I guarantee you, 10 years from now, we talking peanuts at this point right now, right? Because remember what we said, we got to find alternates for energy. We got too much that we're trying to do going into the future. 4-hour chart, we are coming back up. We still got a little turbulence ahead of us, so we could get up to $42.07, and we could get our head bust to the white meat, which means we could come back down. Because as you can see right here, what is this telling us? We got a rejection right here off of this. Let me see, what was this one? this was 41.38. So we did get a rejection. So right now, unless you're doing some shares and you're just building out, preparing to hold where you can kind of keep going down, I would say hold off. To let's see what happens Monday, tomorrow, or Tuesday, by the time y'all see this. But hold off, let's see, because what we ideally want to look for is a close above this $42. And if we can get that, we can at least go in and get us something from 42 to maybe 44, 45. Because right here, we don't want to chance what could happen at this 200, right? We know that 200 can smack you down. Let's go back and see what happened the last time we retested the 200. Wow, it's been a while. So right here, you see what happened. We tested at this 200, boom, rejection, right? Look at all this, rejection. So let's see what goes when we get back up there, if we can make it back. But right now, if you are doing some calls, like you say, Jose said we could push them out, but I will still wait. Just my trade, I wait until we close back above here, because we want to make sure that our risk to reward is on point with what we looking like here. Let's go back down. Let's go a little closer inside of the hood. Let's see where we at. So as you can tell, remember when we go back to looking at our trading, what if we go down a little, man, we just getting closer in, because we're going from high time frames for buying our shares to lower time frames to buying our trading. We get down to our 1 hour chart, and lo and behold, what do we see? And so this is why I said we'll hold off, because on our 1 hour, we have our 200 moving day average right above head. And we can see the last time we hit that 200, it was rough over here. We did start getting smacked down. So we got a decision to make. We can wait and kind of see what is happening. But if you want to look at trades with longer moves, you still remember, this is my line right here. Mm-hmm. So what did I say? Even on the higher time frames, you want to wait until we can close over that 42, which puts us on top of our 200 moving day average. And remember I said we got a little room, so we'll go up to the high time frame, look and see what the move could be. Boom, we just seen it close here. Then so now we'll go back down. Let's go to our 15-day moving average. So on this one, it tells us if we want to come and go in and do a little sneaking on a scalp or something, we waiting to get above right here for a little quick scalp, and then we'll see what's happening. But the trade is not until we break this structure right here, right? Because we just got beat up real quick. So let's say for if you're trying to do a scalp, we break that, then we come back and we see what we got. Still could be a wait situation, because their risk to reward is still not enough. But those for your in and out people, we'll take it down to our 5-minute chart. As we can see, 5 minutes, we resting on our 60, but we still got so much turbulence. We got a VWAP band that we got to fight. We also have a 20 and a 9 EMA. And so remember, what this red tells me is right now currently downtrending. So right now we got to wait until this crosses back over before we even think about getting the call. But I just told y'all a couple of times, we got to wait and see. So don't just go yet unless you're buying some shares. We look at our 1 minute chart and we are below the 200. So just be careful. But that's our platform probing. I really just kind of took y'all through all of those pieces, talked through the decisions that I will make. And I hope that made sense. And if not, run it back because the money is in the charts, right? But look at that line right there, y'all. Look at that line. We got to wait until something happens at that line, because look, big rejection over here, even on the 1 minute. But then we know the money with this happens after 42, we trying to get back up to 60. Man, I think that's it for that platform probing, y'all. Good luck.
Yeah.
Hey, all right, man. Look. CCJ, Uranium, one of the stocks by Zacks that's buy and hold forever. Think about the future. 10 years from now, $42 is going to be some peanuts. I'm just going to say that. That's all. Anything you got on that one, man?
Man, I tell you what, man, it's going to be wild next week.
Yeah. Hey, okay, man. Final thoughts as we get ready to land this plane.
Man, I'm looking forward to it, man. I'm looking forward to see what happens with this news, and then just But the best thing about moving forward next week is that we got a day off on Friday.
Ooh, thank you, baby Jesus.
And Monday.
And Monday. Dude, we got the double Friday and Monday, man. I made a doctor's appointment. I was like, well, it's okay because I can leave right after that if I bust a move, and I don't have to get back until Monday afternoon. Good job. Thank God. Thank God. Sweet baby Jesus, we just say thank you. All right, man. For me, I am definitely with you. 4-day week. Be careful out there in them streets, right? I think the market, I don't know, is the market open for Good Friday? It may be closed this week. So
I think it's closed.
4-day week in the markets. A lot of volatility. We got a lot of announcements coming out. Be careful as you trade. Watch what you're doing in these streets because we know quick as it go up, it can go down. SPY ran up by $34 in one day in not even a long time. It wasn't even all day. So anything can happen out here. Millionaires are being made every day. I just want to make 10,000 in one day, and then I'm gonna just take a break. And I think it's gonna happen soon.
Yeah.
So let's go, man. I guess that's it, man. I'll get this out to you all tomorrow. We'll run it. Make sure you go back and watch the education, the platform probings, all the pieces, because the information is in these charts, and we are practically giving you the game plan on what you can do to grow the bag, whether it's stocks that cost $5, $4, or $400. It's something out here for everybody to hold something, get your money, and then get it. We will see y'all next week. This is KT and
JoJo, baby.
For the Administrators Podcast.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
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 KTTV. Is that right?